In a financial twist that left even the Swiss National Bank astounded, the third quarter brought a colossal 12.04 billion franc loss. Picture this: plummeting gold prices, roller coaster foreign currency investments, and an unforeseen stumble with the Swiss franc. But here's the kicker: we're about to unveil the gripping saga behind this unprecedented setback. Brace yourself as we unravel the mysteries, delve into the repercussions, and serve up invaluable financial insights you simply can't afford to ignore. Let's look first what factors contributed to the Swiss National Bank's Q3 loss. Several factors played a role in this financial challenge. Let's break down the Swiss National Bank's Q3 financial puzzle step by step. Losses on foreign currency investments. One of the key drivers of the SNB's Q3 losses was the sharp decline in the value of its foreign currency investments. During the 3 months leading up to the end of September, the SNB lost a substantial 9.16 billion francs from these investments. This decline was primarily attributed to falling bond and equity prices. Concerns were growing in the financial markets about global interest rates remaining higher for an extended period. As a result, the value of the SNB's foreign currency holdings took a hit. Declining gold prices. While gold is often considered a safe haven asset, it can also be subject to volatility. In the third quarter, global gold prices experienced a downturn. This drop in gold prices was driven by increasing investor concerns about rising interest rates and inflation. The SNB, holding a substantial 1,040 metric tons of gold, couldn't escape the impact of this decline. The valuation loss on their gold holdings amounted to 132 million francs, further contributing to their overall loss. If you're finding this information valuable, and trust me, you will, don't miss a single detail. Hit the subscribe button and ring the notification bell. By subscribing, you'll stay ahead in the financial game and never miss out on crucial insights. Your support is what keeps us going, and we're here to provide you with the knowledge you need. Let's get back to the topic. Another key factor that contributes to this is losses on Swiss franc positions. Another significant factor in the SNB's financial setback was the losses incurred from Swiss franc positions. These losses amounted to 2.66 billion francs. The primary reason behind this loss was the interest paid to commercial banks. Over the first 9 months of the year, the SNB had to shell out 5.4 billion francs in interest to these banks for the money they kept with the central bank overnight. This situation was a direct result of the SNB's negative interest rate policy, dependence on financial markets. The SNB's financial performance is closely tied to the fluctuations and developments in various markets, including gold, foreign exchange, and capital markets. The central bank's financial results have shown a high degree of volatility in recent years, largely due to the substantial foreign currency investments it accumulated during a long campaign aimed at weakening the Swiss franc. So, the Swiss National Bank's third quarter loss was the outcome of a complex interplay of factors, including losses on foreign currency investments, a decline in gold prices, and losses related to Swiss franc positions. These challenges underscore the inherent risks faced by central banks in managing their financial portfolios and navigating a dynamic global economic landscape. Now you might be thinking, what happens next? What are the possible implications and ripple effects of this monumental loss? Now, let's uncover what comes next. What's in store after the Swiss National Bank's Q3 loss? It's like exploring the aftermath of a financial mystery. Number 1. Impact on Swiss government revenue. The Swiss National Bank's SNB Q3 loss of CHF 12.04 billion means that it won't be able to make its usual payout to the Swiss federal and cantonal governments. This has direct implications for government finances. In previous years, the SNB contributed substantial funds to these governments, and the absence of this payout may affect their budget planning and spending capabilities. Number 2. Reduced interest on deposits. The SNB has announced a reduction in the interest it pays on sight deposits held as central bank reserves due to the significant losses in Q3. Sight deposits are funds that commercial banks lodge with the central bank overnight. This decision to reduce interest affects the returns that banks receive on these deposits. In turn, this could impact the profitability of commercial banks and influence their lending and deposit-taking behaviors. Number 3. Dependence on financial markets. The SNB's financial performance is closely tied to various financial markets, including gold, foreign exchange, and capital markets. The central bank has been known to intervene in these markets to influence the value of the Swiss franc and stabilize the economy. However, its substantial foreign currency investments have made it vulnerable to market fluctuations. The SNB's recent losses highlight the high degree of volatility in its financial results, primarily due to its efforts to weaken the Swiss franc. Number 4. Impact on SNB policy. While the Q3 loss may not immediately impact the SNB's monetary policy, it could limit its ability to intervene in the foreign exchange market to weaken the Swiss franc. The SNB has a history of using interventions to prevent the franc from becoming too strong, as a strong currency can hurt Swiss exports. With a reduced financial cushion due to losses, the SNB might be less aggressive in its interventions, potentially affecting the exchange rate. Number 5. Potential implications. The decline in Swiss franc value. A weakened Swiss franc could result from the SNB's losses, making Swiss imports more expensive and potentially reducing the competitiveness of Swiss exports in international markets. Higher inflation. As the Swiss franc weakens, the cost of imported goods and services may rise, contributing to higher inflation in Switzerland. This can affect the cost of living for Swiss residents. Tighter monetary policy. To combat inflation and stabilize the currency, the SNB may raise interest rates further. This, in turn, could lead to higher borrowing costs for businesses and individuals, potentially slowing down economic growth. Reduced confidence. The loss could damage the reputation of the SNB, which is known for its stability and credibility. Reduced confidence in the central bank's ability to manage the Swiss economy could create uncertainty among investors and the public. Market volatility. The SNB's losses might lead to increased volatility in Swiss financial markets as investors react to the unexpected financial setback. This volatility can impact investment decisions and make it more challenging for Swiss businesses to raise capital. Number 6. Global impact. Beyond Switzerland, the SNB's loss could have a global impact. It might lead to other central banks worldwide becoming more cautious in their interventions in foreign exchange markets. This caution could affect global currency markets and the broader international financial system, introducing a new layer of uncertainty. In summary, the SNB's Q3 loss has far-reaching implications, from government finances and domestic inflation to monetary policy and global financial stability. It highlights the interconnectedness of the global financial system and the importance of central banks in managing economic stability. Now, let's explore how the Swiss National Bank plans to bounce back from its recent financial setback. The SNB, known for its financial acumen, has a history of overcoming challenges. Here's how they've tackled losses in the past and what they might do now. Number 1. Selling assets. When faced with losses, the SNB has sold assets to generate cash and reduce risks. For example, in the early 2000s, they sold a substantial part of their gold reserves to cut exposure to the gold market. Number 2. Raising interest rates. To potentially boost income, the SNB may decide to raise interest rates. Historically, this move has not only helped offset losses, but has also contributed to bolstering their reserves. It's akin to a financial booster shot that has shown its effectiveness in the past. Number 3. Borrowing. As a last resort, the SNB has borrowed money from other central banks or financial institutions to cover losses. It's a temporary lifeline that prevents them from defaulting on their obligations. Number 4. Cutting costs. Expense reduction is on the table too. Trimming staff salaries and discretionary spending can tighten the financial ship. These strategies have helped the SNB weather financial storms in the past. They're like tools in their financial toolbox. it's important to remember that the SNB's financial health matters beyond Switzerland's borders. Its actions can influence global financial stability. And there you have it, the inside scoop on the Swiss National Bank's unexpected Q3 loss. But this story is far from over. The financial world is always evolving, and the SNB's journey to recovery is just beginning. Now, what's your take on this financial roller coaster? Do you think the SNB will bounce back stronger than ever, or are there more twists and turns ahead? Share your thoughts in the comments below. We love hearing from our brilliant audience. Thank you for joining us today. Stay tuned for more captivating content. And remember, in the world of finance, knowledge is power. So, keep those questions coming, stay curious, and together, let's navigate the exciting world of finance.